Hello and welcome to the World Copper Podcast. We are the three copper musketeers. I'm Andrew Shaw in the sunny coast of southeast Queensland in Australia. I'm joined tonight by Juan Carlos Guajardo of Plus Mining in Santiago and Simon Hunt of Simon Hunt Strategic Services all the way up there in Dubai. And Simon, I believe you're about to plan an escape and have a holiday, which seems very good timing given the current circumstances. You've clearly been working very hard, and I do believe you're going and looking for a break and a beach for a week.
Except that where I'm going is only about 10 miles from the port of Fujairah, which of course was already hit, or in the main war,
Yeah,
might well be hit again.
right. So it's a sort of hot climate, as you might phrase
It's
it.
hot, and it could become, in a different way, even hotter.
I'm sure if you find the right cold ale or fine wine, the background noise won't matter very much to you. But I do wish that this conflict at least reaches some sort of conclusion, and I'm glad to see you and our technician Salman are safe and well. It's one of those things that just keeps switching itself back on again every now and then. We sort of assumed that there might be some peace and calm, but that, the tale of war and peace is on this one. It's only 3 months old, or if that, but it might be that they're competing with Tolstoy's very thick book if we're not careful. Do you see this escalating, or just carry on with this tit for tat exchange between Iran and the US? Thankfully, it hasn't really sort of escalated into something which is a repeat of what we saw in the darkest days of this conflict. And it has become more subordinate to the news headlines, which is always interesting. That may be a reflection on people's concentration span rather than anything else. But it is still a serious risk to both world peace and global economic fortunes, is it not? Simon, maybe you can give us a bit of a heads up on what you are thinking of the latest developments.
Yeah, it is the most important question, because how long it lasts reverberates through the global economy. And what we three musketeers are interested in, the copper industry.
Mm.
Everything I piece together, not just from my own views, but those who are pretty close to the situation and who have been accurate so far, we are actually probably at halfway house. And that the real issue is that Iran has leverage through the Strait of Hormuz. America's Achilles heel is its dependence for diesel fuel coming from the Strait of Hormuz through sour crude.
Mm.
They are depleting their inventories rapidly. And within a month or so, depending on whose forecasts you use, but within a month or so, those stocks will be depleted. So obviously, President Trump is aware of this. And that is why there has been an escalation. And what we will next see will be an escalation from Iran, because this is not just a tit for tat.
Mm.
For Iran's point of view, it's revenge. And that was encapsulated very recently by the Supreme Leader's statement. So the bottom line is the earliest that we will see vessels flowing freely through the straits, and when I say freely, I mean friendly to Iran, will be the first quarter of next year.
So is it? I mean,
That,
we have seen some increase in flows, but
yeah, that's
nothing
gone. That's
nothing
gone.
like it was in the pre-war days.
Yeah, but that's disappeared.
Mm.
There's virtually no flow now. The
Yes.
only flow that's going through, the latest date was 9th of July. 4 million tons of crude went through, all of which was
Mm.
Iran's.
Yes.
And
So
another factor, sorry, Andy,
no, carry on.
another factor supporting the view that this conflict will not be solved before the year end is the midterm election. The Iranians will probably try to undermine Trump's position in the U.S. Keeping the conflict open. So betting that any defeat of the Republicans in the midterm elections will mean a political change more favorable for them. So we have also this potential factor supporting the continuation of this conflict this year.
Which
Yes.
is why President Trump sees this is a very short window of opportunity, that by November, by October, if not earlier, he's run out of stocks of diesel.
Mm.
If you run out of stocks of diesel, the economy grinds to a standstill.
But there's clearly an impact on global economic well-being from the Straits. So as we said before, 20% or thereabouts of oil flows come through that bottleneck, so to speak.
Correct.
But there's a lot of other products that also originate from that part of the world, not least those products which are dear to our hearts in the world of copper, sulfuric acid. Those flows have been impacted severely to the extent that leaching, which is a form of treating copper oxide ores with acid, has really suffered. And we talked about that in the context of the impact on Chile, especially amongst smaller, more vulnerable mining companies who really have no real protection from higher sulfuric acid prices. But Simon, you've mentioned before the DR Congo, where that impact is a much weightier component in the overall copper supply scheme.
Yeah, I was talking to my friend in the DRC today. You're lucky if you can get a ton of sulfuric acid. And if you get, there's no big deals being done because there isn't any inventory. What is being sold, very small parcels, the price is between $1,000 and $1,200 US.
Which is extraordinary, yes.
Compared to the pre-war price of 250.
Yes. Yeah.
But what is paradoxical here is, on one side we have the SXEW production under big threat because of this lack of sulfuric acid, but on the other side, these high prices of sulfuric acid are sustaining the concentrate market, because
yes,
the high prices are basically allowing copper smelters to have revenue during this period when concentrates are very scarce. So it is a quite
paradoxical
situation in the copper market right now.
Well, let's come on to that.
this is a big benefit to the Chinese smelters.
Yes.
TCRCs where they are at the moment, one of their biggest revenue streams is sulfuric acid.
I think we need to give our listeners a little bit of history on this. And apologize to those listeners who know this topic very well, but many of our listeners don't necessarily know the intricacies of these submarkets. The miner smelter interface, this is where copper miners sell their intermediate product, copper concentrate, typically grades about 25% copper. It's put on large bulk dry bulk carriers and sent to copper smelters, largely in Asia. In the old days, and I was looking at some history not far from where I'm living in Queensland. Believe it or not, I don't know the precise number, but there were dozens and dozens of copper smelters in Australia. I'm sure it would be the same in the United States and the UK. I mean, I'm talking about many dozens of copper smelters. They would have been all very small because when you developed a copper mine, mining these sulfide ore bodies, copper sulfides, you needed to smelt that material to turn it into some sort of metallic product. And then after World War II, the Japanese rebuilt their industry, amongst which was a very large copper smelting and refining fleet. And they were able to approach miners, especially those who were developing larger scale mines at high capital cost, and take that product in return for helping those miners to finance the development of those projects. And in return, they would levy essentially a charge, a fee, I suppose, which we abbreviate as a TCRC, treatment charge and refining charge. And that system persisted for many, many years. It's evolved and changed over the years. And now the Chinese have the largest copper smelting hub. And the system has really heavily relied on both miners and intermediaries, traders, trading houses to do deals to sell that product to those smelters and agree treatment charge terms. And what emerged was what was called a benchmark pricing system. But that, Juan Carlos, that benchmark pricing system, which has been in place for, decades, now appears to be falling apart, or at least evolving. Yeah, maybe you should give us a little bit more on that.
Yeah, the problem is that we have a very extreme concentrate market. That means we have very little concentrates and we have an overcapacity in the smelting side. Therefore, the spot market, the spot price, the spot TCRCs are in negative territory. So that makes no sense to settle a benchmark. Why a copper smelter should sign a long-term contract based on a negative price? That make no sense to them. So I think for a temporary period, we will see no benchmark system operating in the concentrate market, and that's a reason why it seems we are moving into an index system, which is basically following the spot TCRCs. Of course, this allows the smelters not losing face, but on the other side, we have less predictability in their business planning. So, in my opinion, it also has a positive side for the smelters because the reliance on the sulfuric acid is so high that they cannot commit long-term payments to smelters without having also
Yes.
a certainty in the income coming from the sulfuric acid. Mm. So I think the index system would work for a while under the current circumstances.
So there's a bit of a lesson
can I,
here from iron ore, isn't there?
Yeah.
Yeah, but it didn't
add
work
something
very
to
well.
what Juan Carlos was saying?
Carry on. Yes.
To the smelters in China today, the indexing system is really just a recognition of what's been going on in the marketplace. For the smelters, because what the index system does do, it creates monthly changes depending upon the spot TCRCs, spot copper prices, and currency changes. So smelters can no longer budget their budget annually. So what this means is that the smelters are moving into the futures market in order to hedge their intake. The problem is this going to increase the volatility in the spot market, or is it going to stabilize it? Any thoughts, Juan Carlos?
Mm-hmm. Well,
that's a podcast in itself, isn't it?
I'm surrendering. No, but yeah, I think there is no other way forward at the moment, Simon.
No, none at all. I agree.
Yeah. But trying to answer your question, I think it will help to stabilize for a while, because as we discussed before, the sulfuric acid will continue very high for at least for this year. So that will help smelters to run their business under certain, let's say, reasonable level. If we go into a different direction with some problems in the income of smelters, well, in that case, I think we will see much more volatility, because smelters they will have much more pressure to secure their concentrate. So my impression is, at least for this year, we will see certain stabilization.
Well, so far as the Chinese smelters are concerned, their increase in refined production will probably be around 4.5% this year, and they're planning for around 3.5% next year.
Well, we cannot forget something: the ban in China. So that
the export ban on sulfuric acid.
That's right. So that's putting Chinese smelter not in the same competitive position than Indian smelters or Japanese smelters. So that's something that we also need to consider.
But surely that's a strategic decision on the part of the China Inc.
So, I mean, it's I'm sure that one way or another, the sulfuric acid price will be influenced by government policy. So net gain for China and net loss for the rest of the world, because China was exporting a lot of sulfuric acid.
And let's face it, most of the China smelting capacity is in the hands of state-owned enterprises.
Exactly.
And it's hard to imagine that those smelters will close unless they are deemed to close for a variety of reasons. So we've been on this topic previously. China is not going to suddenly disappear on the landscape of copper smelting. I think the interesting thing then, from the point of view of a mine developer, especially at scale, is how do those entities participate in helping those miners grow and build expensive new projects, which we don't see a very long list of?
I think what we will see increasingly is the Chinese copper industry getting involved in new mine projects.
That's happening. Let me give you an update. In the last weeks, we have seen the Chinalco buying Los Calatos in Peru. We saw Los Cangrejos. It's China Moly buying Los Cangrejos in Ecuador. We also have the green light of El Alacrán project in Colombia. So these three examples happens in the last 2-3 weeks. So
yes,
definitively China is accelerating. At the same time, the United States is putting political pressure on Latin America. So it will be very interesting times for us here.
Well, it's a bit of a side show to what we're talking about today, and we could come back to this. But I mean, that sort of quadrant where Papua New Guinea and the Solomon Islands has been an area with huge endowment, and for obvious reasons, its development in terms of large scale, very rich copper, gold porphyries has been held back. But my understanding is that Bougainville is a project that could get up and running. There are a number of very large scale projects in PNG that need a serious amount of capital, and Australia is very sort of interested in trying to shape some sort of influence in that part of the world, and not least because China has shown interest as well. Maybe that's, Simon, you were talking about the Central Asian republics and Russia as not hidden sources of supply, but understated sources of supply. I would argue that
absolutely,
that part of the world of the Pacific is something over the very long term that might be a strategic interest to China. But I think that's another a topic for another day. The miner smelter interface is one thing. What's happening to copper use is on the other. At the end of the day, everyone's interested, but whether you're a miner or a smelter, in the pace of demand growth. One of the consequences we've seen of the conflict in Iran is that we've seen shorter term impacts on global economic growth. It doesn't seem to have really taken the sting out of copper's tail. I don't think the copper price, again, it's what we're somewhere muddling around a little bit below $13,500, not really changed in several podcasts. That may change, I suppose, if the mentality about copper's scarcity starts to change because of things like substitution. I know, Simon, you're very sort of have a strong view on this. That the AI, that every time you open a publication that talks about copper, it's going on about the AI boom, and we can forget about the valuation of AI technology stocks and so on, but copper's uses in data centers and what have you has been very rampant, and it's a bit like, to me, it strikes me as a bit like the EV story, where the fleet is expanding massively and continues to, but at some point in time, that reaches a semblance of maturity. Plus, EV makers, the analogy for what might happen in data centers, are starting to thrift copper. That's a very clear trend. Aluminium wiring, I think you've mentioned before, just lightweighting, alternative technologies that thrift on copper rather than necessarily directly substitute for it. But you've written some pieces on this fairly recently.
Yeah. First of all, let's take China as an example. Daikin, the large Japanese aircon maker, about 8 to 10 years ago, switched all of their tubing to aluminium after about 20 years of research. Now that change has started in China. China's ACR consumption is around 1 million tons. So let's assume that they will switch to ALI at a rate of 10% a year. That's 100,000 tons. What we are also seeing is in low voltage underground cables, an accelerating switch to aluminium. And the copper consumption in those cables is around 2.5 million tons. So let's assume again a 10% switch to ALI. That's another 250,000 tons just on those two uses alone. But it's when you get into the big world of electrification and data centers is where massive changes are coming. And I'm going to quote something that we wrote very recently on electricity grids digitalization. The electrification of everything is reshaping the energy landscape. Within the next decade, grid capacity will need to double in many regions to meet these new requirements, wrote Siemens. Much of this needed capacity is being met by power utilities turning towards grid software, digital twins, and advanced data management as their cornerstones. By optimizing existing capacity, much of the expected growth demand can thus be met. But when you come to the data centers, the first point to take into account is there is a huge difference between what the data centers announce will come on stream and what will actually come on stream. And the difference is massive. For instance, for this year, the announced increases total 16 gigawatts, but only 5 gigawatts is likely to come on stream. And for next year, 21 gigawatts are planned, but only 6.3 is under construction. And then you look at the technology. The first is that copper cables are losing out to radio cables and fiber optics. Second is the introduction of photonics, which replaces electrical copper wiring with light-based communications to transmit the data. What that does is to not only substitute copper, but it also means that you don't need the same cooling capacity that you had before. And the third is the conversion from the traditional 48 kV system into the 800 high voltage direct current power distribution system, which effectively cuts the copper consumption required by about 45%. So the message is be careful to look under the bonnet to see actually what is going on.
So this is the typical sort of copper conundrum of numbers of units versus density or intensity of use of copper, and I don't think that's anything very, very new at all, is it?
Oh,
I mean, people keep on. Every time you pick up any layman's book on copper, it says copper's been used since men first appeared, 10,000 plus years. But it's not very far off the 200th anniversary of a gentleman called Charles Wheatstone and another one called William Cook, who 1837. So we're a little bit of a way to go for the 200th mark of that. Installed the first electric telegraph systems. And I remember going to the Botanic Gardens in Singapore when I lived there, and there was a tree there, which is now a rare tree. It's a type of rubber tree, and it has the nickname gutta percha. And the British discovered, or some intricate British gentleman discovered, that if you crush these things up and melt them down or put them in a bucket or something, you can develop this latex product and coat copper wires with it. And that was the basis of the British basically laying copper cables for telegraphic purposes to connect with their empire. The gutta percha. There's a living example in the Singapore Botanic Gardens. If you happen to be there, I don't think there's many of them left because they've used them all up. But anyway, technology is.
If we could just add on to that, if you're digging up the old cables, you are increasing your scrap flows.
Yes, I'm not sure very many of those deep sea cables will come back.
I was talking about China.
Yes, and that's an interesting one in the data center concept, because I presume the life cycle of those racks and systems inside a data center is relatively short, given the
3 to
progression
5
in
years.
computer technology. So yes, there'll be a big turnover. Scrap, I think, is a topic for yet another podcast. I'm not sure if we've seen any data on whether scrap utilization has increased at these prices. It should be. Whether it is to my mind largely a function of government policy as much as economics. But look, on that note, let's
just to add to that, Andy, scrap imports to China have fallen quite severely, largely because of America. But they have balanced that with increasing imports of blister and anode
from DRC,
from Zambia. Yeah.
So the acid, we come back to the acid conundrum, but also China, I understand, is harvesting its own supplies of internal copper that's no longer in use, but that takes time. Let's and that I think is a good segue into trade, because a big part of that drying up of US exports to China is to do with policy and tariffs, is it not? And didn't we have a date recently? I don't mean in a romantic sense. I meant in the sense that there was an end of June decision point that doesn't appear to have really changed anything in terms of, is the US going to impose a tariff on imports of refined copper? It seems not at the moment. Has that?
The US?
I think that there are higher priorities, particularly in the real critical minerals needed for defense.
Oh, I thought you meant in terms of US political agenda at the moment, but that's a different topic. Yeah.
No, so I think
Trump has just left the market in abeyance.
Yes. It's not the highest on the list of priorities, is what you're saying.
No. Yeah.
And the US is in a very comfortable situation, Andy. They have already 1 million tons of copper in stockpiles, without any major effort. So why they would like to change that? I don't see a clear reason for that. So they are in a very comfortable position, and unless they face some change, I think they have no incentive to move. in a different direction.
Yeah.
The market might do it.
Yeah, but not from the policy side.
Has that become less of a concern for Chile? Cathode supply out of Chile into the US it's not the biggest source, but it's an important one. Yes.
Yeah, Chile is the main supplier of refined copper to the U.S. Around 70% of total imports.
Yes.
But from the Chilean perspective, if these tariffs are applied evenly to everyone, the impact for Chile would be very, very low.
Yes.
So the main problem here would be if the United States starts to apply a differentiated trade policy in copper. For example, providing exemptions in Africa to offset the Chinese influence. If that happens, that could mean certain trade problem for Chile. But if the policy is the same for everyone, I don't see a major impact really.
Yeah, and that seems to be the broader policy thrust of the administration at the moment. Is you support your friends and punish those who are less favorable to you. So the copper industry is a much smaller part of a very much bigger picture. Yes.
There's another aspect of this equation in that in 25, China imported 3.9 million tons of cathode. Probability is that it will be 2.3 million this year and 2.1 next year.
That's a big drop.
It's a huge drop.
And where's the gap going to be made up or not?
Well, it's a combination of rising production and slower growth in copper consumption.
Yes. And what's your expectation for global copper demand this year, Simon?
It's a guessing game.
Yes.
People put forward numbers. Frankly, they mean nothing.
Yes.
Because it all depends on the Strait of Hormuz.
Yeah.
And if we are right that there's no early opening of vessel traffic through the strait, then the minimum fall in global consumption outside China will be 2%.
Yes.
Not plus 2%, but minus 2%. And that means even assuming that you have, should be a correct assumption, that you have a sharp fall in refined copper production outside China, the direction of balances is surpluses.
Yes.
Whether
the scale of those surpluses is the key thing, and as Juan Carlos has mentioned, the US sits on a healthy stockpile of refined metal, and it doesn't look like that's going to get released in a great hurry. Look, we're coming up to the wrap-up time. I'll ask you the same questions. I'll give you a view first. Every time we've had a podcast, at least since the early part of the year, the copper price has been pretty much the same. So I don't really expect that to change very much. I will prophesy a forecast about the World Cup, but I won't offend any of our viewers, and I won't mention who's going to win it. But that gives you a clue.
Okay.
I hope you're right, Andy.
We live in hope, and on that note, I would like to highlight how brilliant the World Cup has been, and not without a twist of irony that it's been co-hosted by the United States. United States football team did very well. There was a little bit of political interference allegedly at one point, but they did very well, and Iran managed to play, and isn't that amazing? The beautiful game. All these nations have come together in this topsy-turvy world and celebrated, I think, the greatest sporting festival on the planet, and long may it go on in that manner.
Andy, sorry, but not all the nations, because Chile and Italy didn't qualify. So
well, next time. I do have a Chile soccer shirt from an occasion when they won the Copa America. So yes, next time. Do better next time.
Thank you.
Quick wrap. My view, next time we three meet again in thunder, lightning, or in rain, the copper price will be pretty much unchanged. That's my expectation. Simon?
Whether it will remain unchanged when we next do the podcast, I'm not prepared to say, but I will say that in the fourth quarter, the copper price will be down and will be down most of next year.
Yes. Juan Carlos.
Well, that is a function of the macro environment.
Yes.
And global liquidity, which is now peaking out.
Yeah.
And you've been uncannily right on some of those topics. I hope they don't come right. Is Juan Carlos?
Yeah. Well, I have forecasted the same in the last two podcasts, and I don't see any reason to change the current level of the copper price, at least in the next month. We are in a very wild world. Things could happen, could change very rapidly. But for the time being, the forces, in my opinion, are balanced. It is true that we have a lot of uncertainties coming from demand, but let me insist in this point. Supply is disappointing more and more. The last Friday we had the Chilean May production 13% below last year, so 9% below the year today compared with 2025. So the supply picture is quite weak, and that helps to sustain the price for a while.
Yes.
What will be the influence of the new management in Codelco?
That's another podcast, Simon, and probably more than one.
on its own.
Absolutely. I will be happy to comment next month.
Well, look, on that note, gentlemen, let's call this a wrap. It's been a pleasure to talk, as always. If you want to find out more about us, check us out on our website, www.theworldcopper.com. We appear every month, or a little bit more regularly these days. In the meantime, safe travels, and we'll see you again.